In this interview with Alina from Samo Financial, she actually goes through a couple of her investment strategies that I think everyone would benefit from. So if you're interested, make sure to stick around. What's going on, everyone? I hope you're all doing well. If you're new here, my name is Serge. Welcome to the channel. To all my reoccurring viewers, thank you so much for all the love and support that each and every single one of you has shown this channel. I greatly appreciate it. Feel free to go check out the God Made podcast on all streaming platforms. Feel free to check out the one-on-one consultation membership that I have down below in the description. Feel free to go check out Legion Assisted Living Academy and Legion Assisted Living Advisors in the links down below. So without further ado, let's go ahead and jump into the topic of this video. Hi, Alina. Thank you for coming on. It's so good to see you again.
Hi, Serge. Great to see you too. How are you?
Yeah, I'm doing good. How are you?
Great. Doing great.
Awesome. So for everybody who is new to you and obviously wants to know more about you, could you kind of tell us a little bit about your background, just from kind of what got you going and what you're doing? And yeah, feel free to go ahead and elaborate on that.
Sure. I'll give you like a brief 2-minute overview. So I started my journey many months ago when my mom and I immigrated to the States, almost 30 years ago. And I was at the point deciding what kind of career I want to pursue. I went with accounting because someone said, hey, if you're good with numbers, you'll be good in accounting. So I just went with that because I figured I'll enjoy accounting because there were plenty of jobs. Turned out I never really liked accounting. I tried both public and private, was
Mhm.
not my thing. And after I realized that, I switched to information technology, where I had 20 years of pretty successful career. But while in the information technology world, I kept thinking back as a tax accountant. I kept thinking that, hey, my roles are growing, so are my tax brackets, and I was already married at the time, so my husband's tax bracket was also growing. So I was like, I need to find a way to lower our taxes. I couldn't lower our tax brackets. That would not be beneficial for both of us.
It's a good problem to have, right?
Yeah. So real estate kept coming up in my research, and I'm like, I gotta take action. I have to do something in real estate since it's such a great field to lower the taxes. So finally, about 8 years ago, I took action, started doing the research, digging to find the strategy that would work for our family. And after trial and error, I came across syndications. And let me know if I need to explain what syndication is. If you think.
Yeah. So I kind of, once you kind of get into that, I kind of want to hear more even about the tax benefits, right? And
Sure.
explain about
Sound good. So on a high level, syndication is a way to passively invest. Typically, it's when a large group of people pulls funds together to buy large commercial real estate. Within that group, a partnership is formed, and within the partnership, there are two subgroups. One subgroup is passive investors, people that passively invest, put their money, and allow active investors or general partners to do the work. So general partners are the one that find the deal, negotiate it, then manage it, buy it, manage, and so forth, and pay dividends to passive investors. So syndication essentially is that full group that does things together. And so when I found it, I'm like, I can invest passively. This is a great way to do business, and I went into that full force. And after doing that for a while and realizing that nobody in my surrounding literally ever heard about this, I'm like, I gotta help other people follow my footsteps. I can help other folks also uh, invest out of Wall Street, diversify portfolio, be completely independent of the stock market fluctuation, save on taxes, and build wealth. This is amazing. And so I started
it.
my own firm, Samo Financial, which operates to this day as an educational company. It educates people on how to become passive investors. And I recently this year joined TF Management Group LLC, which is a real estate fund management company. We build funds with specifically that purpose, help people to invest in a diversified real estate portfolio. So now SEMA acts as a sister company to the TF Management, and we're still moving forward to that. So that's
That's
in a
awesome.
nutshell my journey.
Well, awesome. So let's kind of backtrack real quick because I'm curious. What was the first syndication that you invested in? What was that deal?
So this was value add multifamily in somewhere in Georgia, I forget where, but yeah, it was apartment building that needed to be repositioned, bring value, and pay investor dividends after that. It's still ongoing, but we had a refi point and it's going fantastic. It was amazing deal, one of the best ones. So I'm really happy that I pulled the trigger when I did, but it was, let me tell you, it was extremely stressful experience that first time around. Because
So
imagine,
did you do that as a general partner or as a limited
LP,
partner?
LP, I
LP.
was
Okay.
passive investor, yeah. And it was like, I had to decide on a deal in a place where I've never been, never seen the project other than Google Earth, with the person that I never met in person, only online over the phone,
Hmm.
a few times.
Yeah.
It was extremely stressful for me to pull the trigger, but I'm glad I did.
So talk about that a little bit. How did you get past that, right? That stress, that anxiety, that fear of, ooh, maybe I end up losing this
Yeah.
deal, what, so how'd you get past that? How'd you convince
Yeah.
yourself to get through
Yeah,
that?
no, all of, and by the way, Serge, all of those terms are exactly the right terms. Stress and anxiety, fear of losing 50K that I put in that, it still is a large sum of money. So number one, I guess my accounting career track, because it helped. I've done audits in the past, so audit involves a lot of due diligence. So I started doing my due diligence on the market, on the operator itself, and on the project. Whatever I could find, any people that worked with him, any folks that live locally in the area, I would call and ask about the area, and then talking to the operator, asking a variety of questions, and not only listening to whether the answers were plausible, but also listening how the operator was reacting to my questions and how he was answering the questions. All of that helped. Also, what really helped for me personally to pull the trigger, this was a long time ago, and at that time, I don't think marketing campaigns and CRMs were popular, and
Mm.
so he was using email, and so he made one small mistake. Instead of BCCing his investors, he CC'd everyone. I took advantage of it and I emailed every single person on the list, basically saying, "Hey, I just want to check references. Kind of, do you
That's
know this
awesome.
guy? Have you worked with him?" Yeah. As luck would have it, two people responded, and they gave very positive feedback. And I just went full force. I figured, if two people know them, worked with them, I should pull the trigger. And like I said, I pulled the trigger, and really happy that I did.
Wow.
So that was the story.
That's awesome. So I love that the fact that you saw this like small little opportunity, right? And I think everyone should always take note of that when you see maybe a little mistake that someone does that you can like maximize and be able to use that to your benefit to be able to be like, okay, what else can I do here to make sure that this is the right thing for me? And you did that. And so I love that about that,
Yeah,
like
and to
that whole
his
story.
advantage too. I mean, it turned out to be the operator's advantage because I invested with him. I brought more people, and so
Yes,
he greatly benefited from his own mistakes. Sometimes that works to people's advantage,
absolutely.
making mistakes.
And so like that whole, your reputation precedes you, right? And so it worked out for the GP that was probably putting the deal together, right? And
Yeah,
so that's pretty awesome to hear. So talk a little bit about the tax benefits that you've noticed and been able, and you're coming from an accountant standpoint, right?
yeah.
So talk a little bit about that.
Sure. So when we talking about tax benefits, you don't look at the whole picture of your personal case, but you look at the investments individually, and whether it's a single project or like in TF management case, it's a fund. You get the tax advantages for the syndication as a whole. Where it comes into play, especially when you do value add deals, um, because value add deals, how do they work? You buy a project where you think there is a way to force appreciation. How do you force appreciation? There are three ways to do it. First one, by increasing rents, so improving the income. Second one is by lowering expenses, by maybe, let's say, if you have water bill or electric bill that the landlord pays, by putting it on the tenants, or other ways. And the third way is by compiling, doing both at the same time, increasing rents, increasing income and lowering expenses. How do you increase rents? Well, you either reposition the units or you reposition the property, or you find another way to bring value. Maybe build a pet park, or maybe add a mini storage facility if there is a place to do that, or add covered parking. Whatever the ways are available and beneficial for the particular location, use it to your advantage to force appreciation, and indirectly that allows to increase rent on the property, and hence that allows you to increase value of the property. And when you increase value of the property, you're able to bring bigger income, and that allows you to start paying your investors essentially. Does that
Yeah,
answer your question, Serge?
yeah, that does. And that's a really good point because a lot of people are like, oh, well, how does this benefit me personally? And you answer that directly, right? You don't look at it from a personal standpoint of how you could maximize that, but it's as the whole deal. And so my next question, because TF management, this is more for me too, but I think it's also
Sure.
for the audience. But how does that work with the fund? Could you break that down a little bit about, so you pull all the money together and then from there, what do you do?
So sure. So to add to what I was saying, so when you force appreciation, the building and the property still depreciates, right? And so if the property is old, if it's not just brand new built, then there are ways not only to take advantage of depreciation, but there is also a way to take advantage of the cost segregation study, which essentially is an accelerated depreciation. In layman terms, what it means is that you can take a larger chunk of depreciation upfront.
Mhm.
So imagine if instead of taking maybe 10 or 20% of depreciation, you take 80% of depreciation upfront. You have this huge deduction, which translates into paper loss. What paper loss means is that your tax statement shows losses, when in reality, you may potentially be receiving dividends as a passive investor. And the advantage of that passive loss is that if you cannot take advantage of it in year one, you can carry forward it into the future until you have the passive loss, passive income to net it against. And in this world, it benefits investors tremendously. Why? Because as you probably heard, Serge, Biden administration proposed to potentially remove 1031. I hope that's not going to happen. But if it does happen, in the case of single asset investments, or in a fund where we have a variety of this value add projects, people can take advantage of the tax loss harvesting that I just described. You still have these losses, you carry them forward, and whenever something sells and you have passive gain, you still can do the net, the tax loss harvesting process. You still take passive income against passive losses and only pay the tax on the difference. So that still applies. That government cannot take away, even if the 1031 is taken away. So that's where people benefit by investing in single projects or in a fund like ours. So in general, to answer your question, with the fund, it works exactly like with a single asset syndication. It is still a syndication, just instead of a single asset, we have multiple assets. So people by default, by investing in a fund, get a well-diversified portfolio that still, if it's a growth fund, offers the tax advantages, depreciation, and gains and losses. All of that still apply, and distributions. All of that still applies. So
I'll still
it's
put that.
just it's a way to save on your time as well, because instead of verifying and validating every single operator when you invest in single projects, by investing in one of our funds, you just verify us. The rest
Yeah.
of the work is done by us, by the fund manager. So that
Okay.
gives
So
you a ton of
you guys as the group, as the management, actually are the ones vetting the operators and the
absolutely.
deals instead
Yeah.
of the limited partners. Is there, what is, so as far as, so for instance, let's kind of use an example. I were to invest in your guys' fund.
Mhm.
And so I'm guessing you guys take some form of management fee.
Yes,
Okay.
absolutely. Yeah,
What
there
is
is
that?
yeah,
What
there
does
is.
that look like?
So there is asset, depending on the fund, we have a variety of funds.
Okay.
Some have acquisition fee, others don't, but all of them have asset management fee. Again, the amount varies from fund to fund. Typically, it's anywhere between 1% to 2%.
Okay.
And then just like with a single asset syndication, there's also a split. So some have waterfall, some have a simple split, and we have multiple asset classes. Depending on the amount of the investment you come in with, you may fall into different asset class category. It could be class A, class B, or class C. Again, each of the funds have different categories. And the reason we have a variety of funds is because each investor has a different goal. Some investors have a goal of receiving the immediate income, so we have a fund for that. Some investors are not looking for that, rather they want the delayed gratification. So we have a growth fund, as I mentioned, for that, that will not offer them the returns right away, but if they delay, if they wait a couple of years, they will get those dividends starting at year 2, year 3, and then their investment will multiply down the road 5, 7 years later. So
Okay.
we try to cater to our existing investor audience, and typically it serves any new investors that coming in that fit into profile of a typical fund investor.
Okay, and so for someone who's looking to do like an immediate, right? They're trying to get that immediate income return. What are some examples that are in that as far as the fund that you have?
So we have an income fund that pays on a quarterly basis. It doesn't have any growth component, but if you're looking to have,
And
uh,
so, sorry, so it's more of like a cash flow.
correct, it's
Okay.
pure cash flow.
Okay. And is that more in real estate, and what else does that consist of?
All of our projects are real estate.
All
It
of
could
it's
be different
okay.
projects. So this fund, the income fund that I'm talking about, is actually a note fund. So it's a 1099 instead of K1. People will get it by the end of January, so it's a lot faster. It is absolutely perfect for the self-directed folks because there are no UBIT implications. So if someone is afraid of unrelated business income tax implications, they are non-existent in this income fund. So it's perfect for them.
Okay. See, and that kind of clarifies that a lot. And then as far as the growth fund, what type of returns do investors usually get on that?
So we project the returns to be anywhere between 12 to 18%.
Oh,
And the reason for that is because a typical growth fund, and not just ours in general, operates and looks, the returns of that fund typically look like a J curve, if you can imagine that J curve or a Nike swoosh, whatever you like. Why? Because while we are in accumulation phase, which we're in right now, we're still accumulating projects. But once we stop accumulating projects, because all of these projects need to go through growth phase, they need to go through the repositioning, the value of them slowly goes down. And then as they reposition, it gradually starts to go up. And that's why the J curve that you will see first that there's progression down, then there's progression up. Who this fund is also beneficial for is for the folks that are looking to do backdoor Roth IRA conversions.
okay.
Why? On a high level, in a nutshell, because when you initiate backdoor IRA conversion, you typically pay taxes on the value of your investment when you're doing that conversion. So because the value of this fund going to go down, you're able to save on taxes because the value of your investment will also go down. So instead of, let's say, paying taxes on 100K of the investment that you put in, you may be able to pay on, I don't know, 90 or 80%. I'm just using that as an example because the
Right.
value will go down. So you're saving fraction of taxes on that difference that your investment will have when it will lose some value and when it will be on the bottom of J curve.
Yeah, because it looks like you're having a loss in a sense.
Correct.
Okay.
Correct.
Okay. Yeah, that makes absolute sense. Yeah, and then I love everything. There's just so much knowledge there and so much that I think will help so many people. And obviously there's a lot more that goes into it, which I'll make sure to put all your contact info, and they could obviously reach out to you in the description. But yeah, kind of moving away from all that, kind of tell me more about, like, it sounds like you're just a high achiever. You've done so much and you work with probably a lot of great people. What are some tips and tricks that you use, kind of some not life hacks, but just things that help you stay focused, help you kind of make sure that you're reaching your goals and your potential?
Sure. Yeah, no, awesome question, Serge. I truly appreciate that. So when people ask me, how do I start learning about real estate? I typically tell them, obviously, you need to educate yourself. Books, classes, camps, podcast, networking, all of that works. But in addition to that, there is the other side of the story. You have to work on your mindset. Why? Because as you're learning, you have this preconceived notion, I know nothing about real estate, so I'm not able to buy a building, or I'm not able to flip it or buy a note, whatever it is that you want to do in real estate. So to overcome that, number one, you have to learn. But number two, in conjunction with that, you have to work on your mindset. You have to make sure that you're, again, reading books about mindset shifts and opening up yourself to the opportunities that exist. And what I mean by that, instead of thinking, oh, I cannot buy that building, think to yourself, what do I need to do in order to buy this building? So just a little shift in a sentence makes a huge difference in your mindset shift. And that doesn't happen overnight. It takes some time and effort and mind exercising. And it also takes an effort on educating yourself, reading books such as Miracle Morning or Unleash the Power Within by Tony Robbins. The Miracle Morning is by Hal Elrod. And I mean, there are plenty of books. And by the way, I have a library on my website with books recommendations, both mindset and real estate. I can send you the link if you like.
Yes, yes.
In general, it's just reading about that stuff and surrounding yourself with like-minded entrepreneurs. They don't have to be in real estate, they can be in any field, but as long as they're the people that are also looking to achieve certain things and are overachievers, you will be successful because as I think Jim Rohn said, that you're a reflection of 5 people that are around you. If you surround yourself with the naysayers, you're not going to be able to achieve much because of the negativity around you. But if you surround yourself with people that also, like you, want to achieve something, and what's also important is to know your reason why, as Simon Sinek has put it in his book, something about why. I don't remember the title, but if you Google Simon Sinek and the word why, the book will come up. So basically, you need to know why you're doing what you're doing. For me, the biggest reason is my family. I came here, as I said, with a single mom as an immigrant with empty pockets, not having anything. So my goal and my husband's goal is to build wealth for my kids and future generations so they don't have to suffer and go through the poverty and what we went through ourselves. And because I have that why, and because I have my vision board with my family and with the future the way I envision it, it helps me to move forward and to move past all the obstacles that are on my way. Because believe it or not, all of us have obstacles, and all of us need to find a way to overcome these obstacles. And there are good days and there are bad days, but the only way to overcome these obstacles is to know why. What is your big reason to move forward? So when you have it, you're able to essentially overcome the obstacles, dust off, get up, and go. Without knowing you're strong, without having that reason, and without having a very strong reason, you will not be able to succeed.
Wow, everybody needs to go back and listen to that last 5 minutes that you just, I loved everything you said. And to like caveat off that first part of your mindset, right? I was talking with just a couple of my buddies yesterday. I said, at the end of the day, like we have to wake up every single day with that warrior mindset. Every day should be like if we're going to war, meaning, something's always going to go wrong. Something's always going to happen. And that's just part of being an entrepreneur. That's just part of being whatever it is you're doing, right? Especially when you're doing it on your own. And that's why being able to get yourself surrounded by people, like you were saying, that are like-minded, that are encouraging, that are going to be able to share experiences with you that they've gone through to help you through a season of whatever you may be dealing with in business, and being able to actually learn from them and be like, guys, this is the issue that I'm dealing with. How do I approach this? Right? Because at the end of the day, you don't know everything, and you shouldn't know everything. And being a student of life and being able to be around the types of people that will actually help you, right? Iron sharpens iron, right? And so at the end of the day, that's what you should be focusing on. Like you were saying, I think too many people get caught up in their own self-doubt of being, well, I can't do this, I can't do that, I don't know enough. But at the end of the day, it's all about executing. You have to have your why, like you're saying. and having that vision board and having those goals, and not only just goals but dreams that scare you and that make you uncomfortable and that seem impossible to achieve. Because at the end of the day, if you're chasing those things, even if you don't reach it, you'll still look back and still be like, wow, look at the life that I've, not only just me, but like I'm a man of faith. So I choose, people have different perspectives on it, whether it be energy, the universe, whatever it is.
Sure.
At the end of the day, I give all the glory to God. And for me, that's how I choose to look at it. And however people want to look at it, they don't have to be someone of faith, but having that and being able to look back and being able to channel that all in, yeah, it changes. And like you said, it doesn't happen overnight. I think too many people like that concept of caking a bake or baking a cake, right? You got to let it take time, right? You can't
Agree.
turn up the
Agree.
heat and try to cut the time in half. It's going to come out either uncooked or burnt, one of the two, And so like success is just like that. And then not only that, but you mentioned something really important there that I think a lot of people need to make a note of is being prepared, right? Listening to podcasts, reading books, even though you may not be having any opportunities in your life at the time or in that season, but being consistent in all the good things. I think a lot of people, you hear a lot of people say consistency, but I got this from Andy Frisella, but he was saying, you hear this, right? Stay consistent, be consistent in this, be consistent in that. Well, you can be consistent in bad things as well, right?
Of course.
So
Of course.
consistency doesn't mean anything unless it's consistent in all the right things and all the good things, like you
Yeah.
mentioned.
Yeah. No, you can be eating salad and then wrapping it up with a box of chocolates. That will not help.
That's exactly right. So yeah, Aaliyah, thank you so much. I really do appreciate you coming on and
Pleasure.
sharing just this little time, 20, 30 minutes that we've had together. It's just been a joy, and I really appreciate you for it. And I know a lot of people will get a lot of information. I know it's quick, and that's just the day and age we live in now with Zoom and everything, and having meetings, and especially when you're productive and you're doing things and actually executing, your time should be valuable, and it should be short, but short and sweet. So that's how I
Mhm.
like it. And as long as we can be able to provide value to other people in that short period of time, it goes a long way. So thank you for giving up your time today. And I know a lot of people will appreciate it. So thank you.
Serge, it's absolute pleasure to be here and to provide value to listeners.
Okay, guys, and thank you again. And go check her out. I'll leave everything in the description, her website. Go check out that list of books. I'll also list that link down below. And just continue following her. Where can they find you? LinkedIn? Where do you have, like, what social medias do you have?
Well, I have LinkedIn, Instagram, Facebook, Clubhouse. I don't remember YouTube.
Okay.
Email, the Alina at tempofunding.com or Alina at samofinancial.com. There are quite a few ways to find me. My the platform where I spend the most of time is LinkedIn. So they can,
Okay. Is
yeah,
that the easiest for people to get in touch with you?
absolutely.
Perfect. Awesome. Thank you so much, Alina. We'll talk soon. If you enjoyed this video, please hit that like button for me, smash that subscribe button, go check out all the links down below, go watch all these other videos, and I will talk to you all in the next one. God bless.